Analyzing the XAUUSD H1 chart, price has hit a crucial institutional demand zone. Will the existing bearish breakdown fail, or are we about to see a massive continuation? The institutional verdict is critical. Please watch the full video. This is an educational video, not investment advice. Looking at the current market structure, gold is trading around 4,395, following a decisive bearish expansion from premium liquidity pools. We observe consecutive bearish break of structure confirmations, indicating institutional distribution is firmly in control. However, the asset has descended into a major demand imbalance between 4,320 and 4,350, where institutional buyers are attempting to absorb the downside momentum, creating a potential corrective phase. Our focus is on this entry zone. We are waiting for mitigation here. Once price action confirms internal structure shifts within this demand matrix, we can expect the move to start, targeting upside liquidity. Our invalidation level is strictly set at 4,280. If price breaks this, our bias changes, opening the doors for an aggressive bearish continuation toward lower structural discounts. We map our primary upside scenarios based on the mitigation of unmitigated supply zones. Scenario 1. A successful defense of the current demand zone targets internal liquidity at T1, positioned at 4,470. Scenario 2. Stronger structural continuation will drive price toward the mid-range supply matrix at T2, located at 4,560. Scenario 3. If the bullish retracement capitalizes on major institutional imbalances, the ultimate objective rests at T3, targeting 4,690. Conversely, if the market fails to sustain the 4,320 threshold, the secondary entry zone materializes between 4,470 and 4,490 upon mitigation. For this alternative setup, the invalidation level is strictly set at 4,530, with downside liquidity objectives projected toward T1 at 4,350, T2 at 4,320, and T3 at the major institutional liquidity pool at 4,100. Follow for more. The next analysis is coming very soon.